Have you ever wondered, what is Bitcoin halving and why does it matter? Well, you're not alone. Bitcoin halving is a pivotal event in the cryptocurrency universe that takes place roughly every 4 years. It's a bit like a celestial alignment in the digital currency cosmos, influencing the flow and value of Bitcoin. But what exactly is it? And why should you care? Stick around and you'll understand why Bitcoin halving has such a significant impact on the crypto market. To grasp the concept of Bitcoin halving, you first need to understand how Bitcoin operates. Bitcoin operates on a technology called blockchain, a public ledger containing all transaction data from anyone who uses Bitcoin. Transactions are added to blocks, or the links of code that make up the chain, and each transaction must be recorded on a block. But who is responsible for this recording? Enter Bitcoin miners. Miners use powerful computers to solve complex mathematical problems that validate each transaction. They're like super-powered accountants who spend their days crunching numbers in the Bitcoin ledger. Now, miners don't do this out of the goodness of their hearts. They're rewarded with Bitcoin. This reward system is one of the ways new Bitcoins enter circulation, and it's part of what keeps miners motivated to keep validating transactions, maintaining the security of Bitcoin's network. So, where does Bitcoin halving come into play? Well, Bitcoin has a built-in measure to ensure it doesn't flood the market with too many Bitcoins too quickly. This measure is called Bitcoin halving. Bitcoin halving is a process where the rewards miners receive for verifying transactions are cut in half. Imagine you're an employee, and every 4 years, your boss reduces your salary by 50%. That's essentially what happens during a Bitcoin halving. But in the world of Bitcoin, this is a pre-planned and anticipated event. The halving occurs every 210,000 blocks, which historically has been roughly every 4 years. It's a bit like a financial Olympics. This halving continues until all 21 million Bitcoins are released into the market. The Bitcoin halving is a crucial part of Bitcoin's economic design. It controls inflation, maintains scarcity, and creates a sense of urgency to mine before the next halving, which in turn keeps the network operating smoothly. Now that we understand what Bitcoin halving is, let's dig into its historical occurrences. Bitcoin halving has happened 3 times since Bitcoin's inception in 2009. Let's take a stroll down memory lane to revisit these key milestones in Bitcoin's journey. The first Bitcoin halving took place on November 28, 2012. At that time, Bitcoin's value was around $12.50, and the block reward was cut from 50 to 25 Bitcoins. The event was a significant one, marking the first time Bitcoin's supply algorithm really came into play. The result? Within a year, Bitcoin's price skyrocketed to over $1,000 for the first time ever. Fast forward to July 9, 2016, the date of the second Bitcoin halving. The block reward was further reduced to 12.5 Bitcoins. Back then, Bitcoin was trading at around $650. This halving event set the stage for the extraordinary bull run of 2017, where Bitcoin's value reached close to $20,000, a number that seemed almost unbelievable. And then came the third Bitcoin halving, which happened on May 11, 2020. The block reward was cut down to 6.25 Bitcoins. At the time of this halving, Bitcoin was valued at approximately $8,500. In the months that followed, we witnessed a historic bull run, with Bitcoin smashing through the $20,000, $30,000, $40,000 barriers, and even reaching an all-time high of over $60,000 in April 2021. It's fascinating, isn't it? Each Bitcoin halving event has been followed by an impressive increase in Bitcoin's value. Of course, there are many factors at play here, and correlation does not necessarily mean causation. But it's hard to ignore the pattern that's emerged. As you can see, each halving event has played a significant role in Bitcoin's price trajectory. They serve not only as important markers in Bitcoin's history, but also as catalysts for dramatic price movements. And with the next halving set to occur in 2024, who knows what heights Bitcoin might reach next? You might be wondering, what's the big deal about Bitcoin halving? Well, let's dive into its impact on Bitcoin's price, mining, and scarcity. To start, let's talk about mining. Bitcoin mining is the process where new Bitcoins are created and transactions are verified. Now, when the Bitcoin halving happens, the reward for mining is cut in half. This means miners get fewer Bitcoins for their computational work. Over time, this can lead to fewer miners participating, as the cost of mining might not be as profitable as it once was. However, it's not all gloom for miners. The decrease in rewards often leads to an increase in the price of Bitcoin. This is where the concept of supply and demand kicks in. With fewer Bitcoins being produced, the supply decreases. Yet the demand for Bitcoin, if it stays constant or grows, leads to a price increase. It's the classic economic theory in action. Now, on to scarcity. Bitcoin was designed to have a maximum limit of 21 million coins. With each halving, we edge closer to that limit. Bitcoin halving ensures that Bitcoin won't be mined all at once, thereby preserving its scarcity. It's like a digital form of gold mining. You can't just make more gold when you run out, and the same applies to Bitcoin. This built-in scarcity is one of the reasons why Bitcoin is often referred to as digital gold. So what does this all mean for you? Well, if you're an investor, the increased scarcity and potential price increase might be good news. But if you're a miner, the decreased rewards could be a concern. In the end, the impact of Bitcoin halving can be significant. It affects not just the miners and investors, but the whole cryptocurrency ecosystem. Its influence on the supply of Bitcoin and its price can ripple through the global economy, affecting everything from individual wealth to the strategies of large corporations. So, Bitcoin halving essentially affects the supply of Bitcoin, which in turn can influence its price. Knowing all this, you might be curious about what Bitcoin halving could mean for the future of Bitcoin. Diving into the realm of market predictions, many analysts draw conclusions based on the historical patterns of Bitcoin halving. The past halvings have been associated with significant price increases, and it's not a stretch to wonder if future halvings might follow the same trajectory. Let's unpack this a bit. The first Bitcoin halving in 2012 saw the price of Bitcoin increase from about $12 to over $1,000 within a year. Similarly, the second halving in 2016 sparked a bull run that led Bitcoin's price to skyrocket from around $600 to nearly $20,000 by the end of 2017. Now you might ask, why does this happen? Well, it's all about supply and demand. When the reward for mining Bitcoin is halved, it effectively reduces the rate at which new Bitcoins are created and enter circulation. This scarcity can drive up the price, especially if demand remains strong. However, it's crucial to remember that while history often rhymes, it doesn't always repeat. Many factors influence Bitcoin's price, and halving is just one of them. Market sentiment, regulatory changes, and technological advancements all play significant roles. Looking ahead, some analysts predict that the next halving, projected for 2024, could propel Bitcoin's price even higher. But remember, these are predictions, not certainties. The crypto market is notoriously volatile and unpredictable. Bitcoin halving is a unique feature of its blockchain technology that ensures its finite supply, making it a sort of digital gold. This scarcity factor, coupled with increasing acceptance and adoption of Bitcoin, could potentially drive its value up in the long run. While predictions can't guarantee what will happen, they provide a fascinating glimpse into potential future scenarios. So, whether you're a seasoned trader or a curious observer, the Bitcoin halving continues to be a captivating event to watch in the ever-evolving world of cryptocurrencies. So, why does Bitcoin halving matter? Well, let's circle back to the key points we've discussed today. Bitcoin halving is an integral part of the Bitcoin mechanism that ensures its scarcity and value over time. It's an event that happens roughly every 4 years, reducing the number of new Bitcoins generated and awarded to miners by half. This halving event is a brilliant example of controlled supply in action. It's like a heartbeat in the body of Bitcoin, rhythmically controlling the flow and ensuring the longevity of the cryptocurrency. It's a built-in deflationary measure that mimics the extraction of gold, becoming harder and more resource-intensive over time. But what does this mean for Bitcoin's price? Well, historically, each halving has led to substantial price increases due to the basic economic principle of supply and demand. As the supply of new Bitcoins decreases, and if demand remains the same or increases, the price tends to rise. However, it's important to remember that the crypto market is influenced by many factors and can be unpredictable. Therefore, while Bitcoin halving has historically been a catalyst for price surges, it doesn't guarantee future results. In the end, Bitcoin halving is a fundamental part of Bitcoin's design that can significantly influence its value. Whether you're a crypto enthusiast or just curious, understanding Bitcoin halving can provide valuable insights into the world of cryptocurrency.